Ready on this Monday to take a look at the markets. Nasdaq 1999 again. Are we repeating the 1999 bubble setup? Well, we're certainly in a mega shoot the moon move over here. This is unbelievable. Remember watching over here, looking to see if we had a liquidity grab. Not only that, first pullback, not even a blip. Since then, it has been up only. Has this gone too far too quickly? In the past few days, over the last week, we've been looking at the factors that have been causing this, including earnings putting up. We're going to look at today, or we're going to set up what we're going to be looking at going forward today. And that could be, what are the warning signs that could put an end to this? In the past, months ago, I've always put out to you, well, I'm watching capex spendings. And if there's any type of pullback, that's something that would be a red flag of a concern for me. And I have to say that there's probably going to be a lagging late indicator. So we're going to look for today what could be a forward indication that this is about to come to any type of a crash. Let's go ahead and take a look what's going on this morning first with Bitcoin. We can see that Bitcoin off its lows of the session, still trading slightly down on the day. And a lot of people wondering what's going on with Bitcoin. And why is it lagging as we see the Nasdaq literally melting up? And then we're going to put some perspective to whether or not this is actually a melt up. Have we come too far too quickly? Is this about to roll over? Or is there further room to possibly go on the upside? If you remember, when we take a look at our macro view of the Fed cycle and where we are in Fed cycle, which is in this phase over here, late 2019, when the Fed again had to stop QT and begin raising their balance sheet. And once again, we see that a very similar outcome is underway, and that includes a melt up in equities led by tech. This time, we are seeing a lot more of the same happening. It would be nice to see Bitcoin play a little bit of catch up over here. Don't forget, and we've looked at what happened on Bitcoin a lot during that particular period. And I'm just going to jump back over there to when the Fed pivoted to expanding that balance sheet. We saw that quick move up. Then we saw a lower low, like we've seen this cycle. Again, Bitcoin swept the lows and then began its ascent up. So we would like to see a nice strong move up this time. Again, this is when they lock down the globe. But my expectations is Bitcoin, until it gets ready to go, it's just slightly upward consolidation chatting over here, which in the end is quite bullish. But again, right now we are seeing, for good reason, tech leading once again and the AI build out continuing. I wonder if this is going to be a catalyst. Checking in an STRC. When we're going to see strategy go back into loading the gun for a nice big purchase. We have over here the distribution day, the lock-in day on the 15th. And we're getting close. So I imagine just over the next few days, we should see some Bitcoin accumulated. Big difference compared to the previous month and previous months. I do believe that strategy plans on going to a bi-monthly cadence, which should help. I would say the people that are just going ahead and positioning it in ahead of getting clicked for the distribution, that might go ahead and even out the accumulation. Or there could be other factors going on over here, something to pay attention to, as we are seeing a change this month. But over the next few days, we should start seeing a lot more accumulation underway. Go ahead and just jump back over here. Boom, boom, boom. Is Riot pulling up? I haven't checked on Riot in a minute. As we get into this session later on, towards the end, we can look at it. If not, we'll queue it up for tomorrow. So we see Bitcoin over here, and I like looking at this. This is the inverted channel. It helped us when we had the breakdown over here because, again, sentiment was pretty darn bearish for Bitcoin at that point. It helped us set I would say, expectations for a breakdown, retest, hold your breath type moment, and now we are getting resumption down. Next leg, does it take us into the pocket over here, somewhere around $88,000? I don't know. I've positioned, and everyone here that's been following on a regular basis knows that. I guess it was probably like 6 weeks ago, 7 weeks ago. maybe around that time, I started talking about Block, BLOX, and why I was investing in there. Turns out it's been pretty good. Looks in high risk, no doubt. Do your own research. If I am able to put that video into the description of tomorrow's video, I will do that. It's good to take a look at, but that's the way that I went ahead and accumulated more. Let's say Bitcoin proxy on that trade. Nasdaq able to fight off some red this morning as well, and markets obviously are taking a look at what's going on as the situation in the Strait of Hormuz continues to, let's say, worsen. There's a large divide between where the two parties are. President Trump headed to meet President Z. Is that the title of Z? President Z? I'm not so sure. But anyway, Trump and Z meeting on the 15th and setting up for what could be some type of progress in China-US relations, or maybe even another setback. Maybe the Chinese are saying, hey, listen, let's see who wins the midterms. Let's see where this is going. I don't know what's going to happen over here, but we are still seeing the price of oil trading just below $100. And you could see that almost in unison. We're watching the 10-year trade with the price of oil. If we see a breakout to the upside, I imagine it could be and accelerate pretty swiftly. That could be a major problem. So again, just watch what happens with crude, because as crude goes, as our yields going right now, and that's something that we have to watch out. Cabby, great thing to do right now. You could just, well, don't do it right now because we're going to get into this session and I want you here to see what's going on. But if you go into TradingView and you look at the 3 months performance of Block, and then look at Bitcoin, and then look at the 1 year performance of Block versus Bitcoin, I imagine it looks something like in the last year to date that Bitcoin is down 6-7% and Block is break even, up 1%, but that's also not accounting for the distributions, which are roughly 34% of year. So we're into right now May, so call that probably an additional, I don't know, 12-14%. That, so it looks like year to date, then you would say that Block is outperforming. This is rough napkin sketch math here for y'all right now, but I would imagine something like 21%, something like that. That's pretty significant, I think, you know? So, listen, is it late to enter right now? Be south and listen to everyone. Two things. That's a good question. I don't have it pulled up right here right now. Be south. This is V2 and why we have all of our V4 ready to go for stocks. One thing, and by the way, I mean T-triple-Q. You never know. I pointed out that T-triple-Q is up a gazillion, right? On the V4, all forward tested since we started over here. And our V2 didn't catch it. But that same filter, the ST1, that's keeping T-triple-Q out over here, is also keeping bulls out on V4. So the takeaway there is, listen, guys, you never know at what particular moment is going to outperform, which is why we first of all make highly concentrated selections. We have chosen Bitcoin and crypto, right? And then we've chosen stocks led by tech, whether or not it's the NVIDIA and Tesla. Then we have FNGU and T-triple-Q, the indexes, FANG Plus play, and then of course MicroStrategy and GBTC, and you diversify within all of them as well. So we have concentrated diversification. I have to check on that and be south as I take a look at what's going on with your bulls later in the day. At that point, I'll ping you and let you know. I don't have it to pull up right now as we're talking, and if I'm able in the session, I will. But we are looking on V2, NVIDIA up a massive now 21%. Strategy up 33%. What a wave We're looking at Tesla continuing this run up 12%. GBTC finally back in the market after waiting out that massive downward momentum, up basically at break even, up 3%. FNGU overall and throughout the history, our best performer, catching a nice 21%. Looks fantastic over here. And tech leading, Bitcoin and crypto, is still waiting for a catalyst here to break out and get a move going on. You know, as far as, this is a great question, as far as negative exclusions. So if you look, what I would recommend is go back into the list of trades. You could put it into a spreadsheet, make it easier to navigate, and find out the largest winning trades. And then look at what their negative exclusions could be. The problem is that if you have a trade that pulls 40, 70% gain, and that's the trade that didn't have a negative exclusion, that's going to make what you're trying to do just absolutely worthless. That's the worry over there. I wouldn't do it. We've looked at it extensively, but go ahead and do take a look and see if that's something that you want to consider. We're almost to the point. I mean, the other thing here is, since we are riding this massive wave right now in the stocks, that means that we have the opportunity to hold off until bringing the V4 stocks live. So hopefully that unwinds soon and we're able to get those out. It's at the top of my priority, but I'm taking care of pretty strong priorities right now, which is why. But we're ready to go. It's going to be beautiful. I can't wait. And then we're going to just jump back over here. Let's take a look at what's going on right now and move over to, but I think it's important to frame this over here. This is from Stackholder. And 3 points. It's only going to read 3 points over here. And let's see whether or not, I think it's a good lead into about what we're about to look in, and then we could add a ton of nuance to it. But 3 things. Fiat supply expands to accommodate gargantuan debt loads. Fiscal dominance. Guys, the Fed playbook as it is, this is where we begin expanding the balance sheet. This is not outright QE, okay? And we have a new Fed chair in right now. And he's talking about bringing down the balance sheet. And I don't know what that means, and you don't know what that means. And I don't know if the Genius Act, the hopefully soon passed, well, I don't know if I should say hopefully or not, the likely soon passed Clarity Act, if all this is setting up some type of new system, we're going to have to be here together and work it out in real time. Right now, we're seeing one thing happen over here. This is where Bitcoin bottomed. This is where equities bottomed. This is where Michael Burry told you to sell everything. He's bearish again. Anyway, guys, this was during tight monetary policy. The Fed just changed their monetary policy over here and has been more accommodative. We don't know going forward if crude winds up trading above 120, 150, if yields start blowing out and the Fed is forced to raise rates. If the Fed returns to tight monetary policy, that's a factor that we're going to have to go ahead and adjust to. That's a big deal, but that's not happening right now. Right now, we are seeing the beginning stages of what looks like the fiat supply expanding to accommodate the debt loads. Fiscal dominance is a major factor in the market today, which is why you were able just to see Bitcoin equities bottoming in the face of tight monetary policy. That usually does not happen. That was the market paying more attention to fiscal dominance. Number 2, token consumption grows exponentially as AI agents work around the clock. Yeah, you know what? I used in the last 7 days 107 million tokens. That's exponential growth for myself. I would imagine that is happening at an exponential rate. This is before we see let's say, when I talk about AI agents, I'm also talking about the robots, right? And everything else becoming more automated. I definitely see a long rise, a sharp rise in token use. And by 2030, that's expected to grow a lot. We could all agree with that, I think. AI proliferates into the real world via robotics, smart sensors, etc. Look, obviously, you need the chips to have the robots. Elon trying to pull off an absolute miracle, obviously not a miracle, but an engineering feat by building the fab. Right now, as it stands, there are simply not enough chips available for what needs to be built out to be built out. Assuming that it continues, we could say the AI build out is actually just getting started. Using those 3 points as a bit of a framework, let's go ahead and take a look a little bit further. First, I'm going to start off with you are here, right? And we have the beginning of the video, and we're looking at like compared to where we are on the 1999 track, we are actually there's a long way to go. And I love that little blip down that comes ahead of us. As you know, during midterm elections and also a new Fed chair, markets generally from this time today through the end of September experience a pullback that's usually about 10%. Now, we don't know that that's going to happen. I mean, people are, let's say, um, prepared for it, aware of it. And I could also say, well, you know what? The market knew those things were happening and just came off a 10% pullback. So that's, was that the pullback that everyone was waiting for? And is the market just growing more and more self-aware and front running these events? Maybe, maybe not. I don't know. We could look at the seasonalities and we say, well, markets so far are continuing to follow that seasonality. I would say it was likely caused by the unknown of the geopolitical situation when the Strait of Hormuz was closed and 20% of the oil supply of the world was cut off. And I think everyone would agree. And then here you have what is the situation far from resolved, and then the markets shooting up to a degree that's basically unprecedented. So, we're just painting the picture, and we're going to continue to paint the picture of where we are. And this is looking at the Nasdaq with that in the white over here, the 1999 track into the 2000 and top, and it was looking at if we included the mid 90s move to where we are today, and you could see that from where we are today in blue, where we're significantly underperforming that. In this second view of it, it is lining it up where the April 2025 pullback, the Liberation Day, the tariffs coincides with the 1998 trough. And that trajectory, the move isn't even half as significant as what it was in 1999. And then you have lining this up over here. If you line up the current Middle East conflict low to that 1998 trough, which I mean, that fits pretty well, but I think guys, I don't know if I'm right or wrong. This is that last trough, and lining it up over here seems to be the track that we were following all through 2025, comparing the two back-to-back S&P 500 gains. You could see this is the tariff scare over here and coming it up. Either way, you could say that if you are comparing this, as a lot of people are, to 1999, there is still a long way to go into valuations. Well, we looked at the Warren Buffett valuation on Friday and talked about that. You could see over here bubbles. Different type of investors have their own interpretation of a bubble, but the majority will agree a common feature is some kind of valuation excess, if not some kind of valuation absurdity. And despite the recent market gains, there's little evidence of broad equity markets by sector, country, really being close to bubble type territory. Let's continue down over here. A couple of things I want to talk about is that earnings are the driving factor of this current move. We looked at Deutsche Bank just put out a paper that it's the highest earnings beats in 11 years of course, it's coming from the hyperscalers, Amazon, Google, looking at NVIDIA. By the way, NVIDIA's earnings coming up here at the end of the month, something to pay attention to. The macro, we looked at the macro. And again, I just talked about earlier that if the Fed hikes, that's something that we would have to worry about. Here you can see long-term yields spiking up. That's something that we could get worried about. And then I'm gonna pass through this to get to what I want to talk about. Then we have the tokenomics that we've talked about and where we are and the expectations into the end of the decade. And it makes sense to me. I see my own personal token usage going up exponentially. Let's look at a couple of different things. By the way, if you remember not too long ago, at the beginning of November, when everyone was talking about how we're seeing such a deterioration in the macro, that the job market was just falling out. So, well, I think that's probably the worst print we're going to receive. And by the way, I don't know if the prints we were receiving right now are fake news. Are they fake? Probably. Are the revisions that we see going to paint a disaster? Likely. But I do know around me, I have friends that were out of work that have been returning to work. I think that's a pretty strong signal over there. But I did point it out that the Fed, who was then stopping QT and going to begin raising that balance sheet, the Fed is going to be easing into reacceleration, and that's going to become a narrative 3 to 6 months from now. Today, we see that the option market confirms it. Sentiment has flipped from the hard landing and geopolitical shock to re-acceleration. The AI capex supercycle is just over a month. The narrative is always late. I think we were ahead. I bring this up for Dog and Nation. He was talking about the worry if we see the capex, the hyperscalers spending all this money on capex, pull back their spending on buybacks, which is interesting right now. The market is favoring the capex spenders. And I just want to point out one thing over here, one data point for you, that we are looking at a still increase in buybacks, but buybacks are only increasing for this year by 3%. So we're not seeing more money going into buybacks, but we're not seeing less at all. It's buybacks are still a major passive force into the markets. And that's one thing that a lot of people have to contend with is the major passive flows. We have obviously every week people's paychecks going into the retirement accounts, which are going into passive flows into the indexes. We continue to see the buybacks leading the way over here. I want to jump over and talk about this. Tomorrow's session, for those that are here and want to know, or maybe not, maybe Wednesday session, I want to begin. Well, I'm not going to even set that up right now. If you're here, you're here. If you're not, well, you're going to miss it, and that's all. But let me talk about things that I'm watching over here. And this is, listen, it's nice to look at some type of fractal and be like, oh, we're on, a track watch of what happened in the 1999 blow off bubble led by telecom, capex spending. And right now we're in the midst of a similar situation, and we're going to watch a fractal. I'm like, well, no. Listen, what I am in the early innings of putting together would be finding out what happened back then, what could potentially point to the fact that either less important if we're in a bubble or not. And guys, the reason I started this with the three qualifiers, number one, is that the fiat printing needed to service the debt, the fiscal dominance continuing. We also see now just the massive amount of short-term issuance to go ahead and do that. We see the Fed printing, raising the balance sheet. They have to print to do that. We see the Fed then using buybacks at an ever increasing rate to go ahead and take that long duration off of their balance sheet. That is the beginning stages of yield control curve happening right now. And then we see yes, the AI build out is real. And not only is the AI build out real, it's likely just getting started. And we continue to see massive increases year over year. Yeah, there are constraints, but guess what? Those constraints will likely be overcome. And then we continue to see things like as we move forward and we move towards the robots and the continued massive, massive, massive exponential growth of this. We see things like NVIDIA, we're just talking about buybacks. A lot of companies in the past would take their free cash flow and use it to buy back stock, financial engineering. The video's like, no, we're going to invest in the companies that yes, they happen to be in our pipeline. Guess what? We all work together. It's me and these people who are building the future. And you know what? If I invest in this company that I'm not naming any companies today, these companies that and they've seen massive returns so far, massive returns. And guess what? Those companies have more funds to continue building what they're building. And yeah, is it dependent on then NVIDIA? Yeah. Is that a circle like the Oracle OpenAI? Um, or is this something that is smart? I go with the smart. I don't know about you. Uh, anyway, what we're looking at over here, though, is three different categories. If you looked at what happened in the dot-com bubble, when you saw the markets begin to correct March 2000, it was a significant 3 months later, 6 months later, a significant time afterwards that actually capex spending had pulled back. Anyway, without getting into it today, because I would like to get into it with you in detail, and we're going to go ahead and wind this session down in just a moment. I am looking at the qualifiers, and you can see over here, the qualifiers in comparing the 2000 and telecom boom to the AI capex spending over here of what actually could give us early warning signs that potentially we are looking at this coming to effect. By the way, two of them that are pretty important, and again, I'm just skimming here, is number one, back then we were looking at PMIs deteriorating in 2000. Right now, we're looking at them moving into expansion territory, much different places in the business cycle. Another one, I'm trying to find it over here, is that the Fed monetary policy, they were moving towards tightening. Right now, they're moving towards easing. So those are two pretty big qualifiers that are pointing towards there's still a lot of room right now to go. But through all of that small articulation to you, I missed the biggest ones. That's what I will break down tomorrow in the week ahead for you, and then I'm going to work towards actually having some type of real-time monitoring that will post into the Discord, keep us aware of any flags that are coming up, or allow us to know that, you know what, it seems that we have a lot of clear runway over here. We're going to go ahead, integrate that. That is something that for me is really important, because things that are unhelpful for me is people like Barry yelling sell. Anyway, for now, if you're new here, welcome. Subscribe. If you're not, welcome back. Everyone, have a beautiful day. CTM strong. God bless you all. Back to work.